Today, we're going to be talking about the Federal Reserve raising interest rates by 0.75 again. Why did they do it, and are we in a recession? Let's waste no time. Let's get right into the content today. Before we do, if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. So a couple of days ago now, the Federal Reserve raised interest rates by 0.75 again. Now the first time when this happened last month, it was so much chatter about it. It was all in the news. We had all the articles about how this is the highest rate hike since so many years ago. So many people were talking about it because it was a bold and aggressive move. Now this was another bold and aggressive move, but not quite as much because at this point we were expecting it. We know the Federal Reserve is trying to fight inflation. Inflation has been a problem. It has been that fly just kind of flying around by you that you absolutely hate and need to get rid of. For a lot of people, though, it's been a major issue because of how high prices have gone up. It's caused a strain for a lot of people. We don't want this to get out of control, so the Federal Reserve been raising rates at a more and more aggressive rate. Remember, we had that 0.25, the 0.5, now the 0.75 back-to-back times. And the prime rate right now is at 5.5%, and for different people, for different reasons, it's a good and a bad thing. For certain companies, they make money when interest rates go up. For other companies that might be borrowing a lot, this might hurt their bottom line. For consumers, though, for us, because at the end of the day, how does this affect us? How can we benefit from this information? That's how we should always be thinking. Taking the information, be like sponges when it comes to information, but how can it benefit us? How can we succeed from knowing this? So number one thing, we need to know that this is going to increase the cost of borrowing. So borrowing is going to be more expensive in general. Now there's ways around this, but the borrowing in general is more expensive now. The reason why is because rates are higher. The same amount that you would pay interest wise on things before is going to be higher. So for some people that means I need to get my debt down. For some people I need to consolidate. I need to look at other alternative options for lending that might be cheaper. Keep all of that in mind on a personal note. But the reason why the Federal Reserve is doing it is because with higher rates, people know it's going to cost more to borrow. So people are going to be less inclined to borrow now, even more now with the second 0.75. So, and with that, less people borrowing, less people, oh, what am I going to do? You know what, today I'm not going to do anything because I don't want to have a higher borrowing cost down the line. If you get enough of that, then it can lead to a slowdown, a decrease in GDP that we'll talk about a little bit later, that can just kind of cool things off, let the supply chain get back, let things, it's a balancing scale. So just think about that balancing scale that goes back and forth, and it's an art to it. It's a certain type of way that you need to do this for it to, because it could be a catastrophe going both ways. If you raise rates too much, you could cause a catastrophe on the left side. But if you don't do anything, you let inflation lead to potentially hyperinflation, or just to the point where people can't afford anything, catastrophe there. So you want to stay in the middle, and it's a balancing act as a way to do it. Now, I do agree with the Federal Reserve being aggressive, being bold again, raising the rates by 0.75, because you really do want to get inflation under control. But when you do this, you always run the risk of being too bold, too aggressive, and starting a recession. And for us, the numbers are out, the data is here, and it looks like we are in a recession. So the data has been released, and GDP has shrunk as contracted for the second quarter in a row. The reason why that's important is because 2 consecutive quarters of negative growth, of negative GDP, is the technical term for a recession. So by the numbers, we are officially in a recession. And some people are thinking, well, wait a minute, Jerome Powell just spoke a couple of days ago and he says he doesn't think that we're in a recession. And it's interesting that he said that, because compared to the numbers, what really is a recession? 2 quarters of negative GDP in a row. That has officially happened. The data, the numbers, the charts, it has all been compiled. We are officially in a recession. The reason why Jerome Powell said exactly what he said up there, and he said that he doesn't think that we're in a recession, is because being as the chairman for the Federal Reserve, and any board member or reserve member, when you hear them speak, they understand that what they say has a big impact on markets, sentiment, people, business leaders. It affects so many things. Their words hold a lot more weight than somebody like me just speaking and just letting you know exactly what it is. I can tell you exactly what it is. We are technically in a recession. Jerome Powell saying it quite that way might send shock waves throughout the market, so he's going to be a lot more calculated with his words. And he makes some good points as well, because there are some parts of the economy that are doing great. They're still booming. There are other parts of the economy, like for example trucking, where you have seen quite a bit of a slowdown. Different parts of the economy that were just firing on all cylinders in times past, right now you are not seeing as much growth, while other industries might be doing just fine. A couple of reasons for that. No 2 recessions are the same. So a lot of people look back at the recession of '08, the housing market crash, and a really bad recession. A lot of people lost their jobs, bailouts, all type of bad stuff. The COVID recession, where the government had to come in and provide a whole bunch of liquidity, a whole bunch of funding. Otherwise, you would have had the mother of all crashes. Not all recessions are quite that deep, quite that heavy. The current one that we're in, you're still seeing parts of the economy that are just doing just fine. If you told certain people we were in a recession, they would just look at you funny, like that's not what we have going on. But by the numbers, that is what we have going on. And another thing that we have to keep in mind, the economy here is so diverse. It's so big. Our gross domestic production is absolutely huge. And with it being so big, you can have negative growth overall, while certain sectors and certain facets of that economy are just doing fine, just doing phenomenal, or doing as they need to be doing. The reason why, because it is so big, because it is so diverse, and also because no 2 recessions are the same. Not everyone is going to be as big, as heavy as certain ones that we've come to know because they've been discussed as much. But by the numbers, we are officially in a recession.